All right, so I was cruising on Instagram and I saw Alt made a post about an article. Tariffs are driving investors to Pokemon and Mickey Mantle cards as trading cards gain credibility as domestic assets. Very interesting. Maybe investing in sports cards and Pokemon cards might become a legitimate thing again, like we saw in 2020 and 2021 when COVID really kind of overtook the whole hobby. So I went to the article here, and it is from the New York Post, so take it with a grain of salt, but this was published on April 28th, and let's dive into it. I haven't even read this, by the way, so I just want to be clear. I have not even read this at all. We are diving into it together for the first time, both you and I. Since its invention, Wall Street has dictated what counts as a real investment. Stocks, absolutely. Property and real estate, of course. But trading cards, too sentimental, too niche, too hobbyist? That outdated perception is shifting fast. As tariffs begin driving up the cost of imported goods, consumers are increasingly turning toward domestic assets already here. Resale markets, collectibles, and trading cards are seeing a surge in demand as investors seek out alternatives beyond the traditional mix of stocks and bonds. Collectibles have emerged as a legitimate asset class, a $600 billion plus global industry. That is crazy, $600 billion, with trading cards alone valued at more than $15 billion as of 2024. So memorabilia must be a huge component of it. These are no longer just nostalgic artifacts, they're financial instruments with real staying power. Then they got a couple pictures of some cool sales. Trading cards share many characteristics with asset banks already recognized as legitimate investments. I'm telling you, I've told people this for a little bit now. You're going to be able to go to like the bank, maybe the casino, maybe the sports book, and put down a $28,000 Shohei Ohtani card on Black 17 or get the money line of the game, whatever it may be. Long before blockchain promised digital scarcity, cards were verifiable limited edition assets with authentication and passionate collector bases. Whoa, where to go? Unlike many speculative digital assets, trading cards have survived recessions, inflation, market crashes, and now a tariff-driven economy, proving their resilience. At Alt, we've tracked millions of transactions across graded trading cards on major marketplaces, and the data tell a compelling story. The trading card market is not only vibrant, it's growing. I stand by that. I think it is continuously growing. We're seeing resellers and scalpers coming in and out, but collectors, those that get into it more recently, have fallen in love and they're into it. Of course, some collectors will take time off, come in, come out, whatever it may be. And then there's a ton of people that have been collecting for as long as they've been alive, honestly, or ever since they were a kid. So it's continuously growing. And of course, some of the older collectors are dying off just because they're getting older and such like that. But this hobby is just generationally younger now than it was 10 years ago, 20 years ago, and even into the 90s, 80s, 70s, and so on. In 2024 alone, graded trading card transactions across markets grew by 17.8% compared with 2023 and by 68.7% compared with 2021, reflecting steady and sustained interest in the category over the past 4 years. Total transaction value also grew by 10.35% year over year from 2023 to 2024, signaling buyers' increased confidence and participation. This could just be a sign of people getting more residual income. Maybe it's a sign that people are starting to grow and expand their collection, wanting higher ticket items. I don't think that's necessarily a direct correlation to people investing. I think it's more so that cards are becoming more and more valuable. People have to pay for these cards if they want them. And I don't think it's necessarily, let me invest when I make this purchase. I want this card, so I'm going to pay for this card. Of course, there is an element of investing, of course. Again, it's just not directly correlated to investing, at least in my humble opinion. But let me know down below with your comments as we go throughout this article, because I definitely want to read and reply to any and all comments, thoughts, questions, concerns, anything you guys have. Drop those down below in the comments. And while you're there, smash the thumbs up button, subscribe to the channel if you're new or haven't considered subscribing. Check out the channel membership program as well while you guys are down there. I would definitely appreciate the love and support. Particularly notable is the momentum in the sub $1,000 category, where both transactions count and value grew by nearly 18%. A clear indicator trading cards remain accessible, investable, and relevant to a broad range of collectors and investors alike. I mean, they're really throwing this whole investment term around, and of course, there is an element to it, but let's just make sure we are all clear. That's why I said, New York Post, take it with a grain of salt. It is not a direct correlation. If I go buy a card on eBay for less than $1,000, that doesn't mean it's an investment. It could just because I'm a collector. Yes, it's accessible. Yes, it's relevant. But for me, it's definitely not an investment. I could care less if the value of the card goes up or down. That's just me coming from a collector's mindset and a standpoint. There are people going to be out there that are buying the card for, say, $300, hoping it's a $500 card before the new year. Nowhere is this growth more apparent than in Pokemon cards, whose worth has risen significantly. Recently, our data show the overall value has increased by nearly 20% over the past few months, with some individual cards experiencing price surges of up to 150%. You guys know I have my own thoughts on this. I've definitely made some videos about this in the past. This trend underscores the growing recognition of trading cards as viable alternative assets in today's market. But be careful though, because a lot of Pokemon cards that spiked up to whatever their ceiling or whatever their peak was are starting to drop. They are not crashing, they are not tanking, but they are dropping anywhere from 5 to 15 to 20%. Whatever you want to consider a crash is, that's on you. 20% kind of does look like a crash, but it's definitely not, peak up, peak all the way down. So just be careful out there. I mean, just like with any investment, trading cards or real estate, stocks, whatever it may be, investment is a risk at the end of the day. So just be very, very careful. And I'm not here to try to give you financial advice, investment advice at all. I'm just giving you my thoughts and opinions about this. That's because I'm making this video for you guys. And I think that I at least have some valuable thoughts and opinions to share with you. As avid collectors, this trend underscore, okay, we read that. As avid collectors, we've been trading cards since childhood. Back then, it was about scraping together the cash to buy the must-have cards. But over time, it became clear we weren't just collecting, we were investing. That is absolutely not true. Back then, we were scraping together cash to buy packs, boxes, tins. I mean, no one really cared specifically to buy the individual cards. I'm speaking from a baseball collector, a Yu-Gi-Oh collector, people I've talked to who collected Pokemon back in the day who are now back into it. It wasn't to scrape enough cash to buy the must-have cards. You traded for the must-have cards. That you absolutely did. But you weren't buying the must-have cards, not at the time. To be clear, we weren't just collecting, we were investing. No one cared about the value of the cards back then. No one could care less about the value of the cards back then. Hindsight's 2020. Sure, it looks like it was an investment now when we look back then, but in the moment back then, it was not investing. It was collecting and having fun. Lior began strategically acquiring Kobe Bryant cards in 2016 using platforms like eBay to spot undervalued assets. A $15,000 investment grew into $15 million, not by luck, but by data-driven strategy. Or that $15,000 investment grew into $15 million because he passed away, the COVID boom. And of course, they're not making that kind of card anymore. And it's probably a 101 hours to get. It's probably a PSA 10 game used patch auto. That's probably 3-4 colors. I mean, it's just, they're leaving out a lot of key details here and what kind of card that is. I mean, if I'm a novice, you might be a novice, and you're just reading that, you're going to be like, wow, that's fantastic. I can do that too. Let me go spend $15,000, wait 9 years, and it'll be a $15 million. It doesn't work like that. Give us some details, please. For investors seeking liquidity, trading cards provide entry points at almost any price level. That at least is true. I'll give you that one. While 7-figure Mickey Mantle and Pokemon Illustrator cards dominate headlines, investment-grade cards in the $1,000 to $10,000 range make them more attainable than commercial property or fine art. I can't speak about the fine art. I don't know a damn thing about fine art. Anybody that's into fine art, definitely drop a comment down below or reach out to me via social media. Give me a little bit of education about it. I mean, I've actually told Mrs. Murph, I'm like, hey, let's go to an art museum. Wouldn't it be fun? Like, you don't do art. I'm like, no, but it'd be fun to learn. Anyways, sure, it is more obtainable than commercial property, but commercial property, even residential property, just real estate alone, average appreciation is 3% year over year. Sports cards, I'll kind of just include just sports cards here. The natural trajectory of 95% of sports cards is down. Now, if we want to talk about vintage cards, one of ones, RPAs, graded 10s, just niche stuff you just don't see. Like, I mean, how many $5,000 ultra modern cards do we see? $1,000 ultra modern cards that just depreciate over time for whatever reason. Player performance isn't there. We're on to the next young quarterback or the next young player. Whether it's inflation, economic reasons, whatever the reason is, it just goes down. So, I mean, if I was to go buy a $3,000 Jaden Daniels card today, yes, it's more attainable than, say, a house or a strip mall, but that doesn't mean it's a better investment. As traditional goods and imports are becoming more expensive and less accessible, collectibles offer a rare edge. They're already here. Resale markets are surging as buyers turn to high-quality domestic assets that don't come with the uncertainty of international supply chains or price instability. That is a good point. Trading cards with their well-established market history, institutionalized grade infrastructure, and proven resilience provide a very attractive solution for those looking outside traditional markets. Yes, trading cards are investable. Yes, there's a market history. But look at the market history. It's not all up like a lot of stocks. How many times has the S&P 500 or the Dow Jones reached an all-time high? So many different times over the course of history. How many times has a Justin Herbert, one of one RPA from Flawless, reached its all-time high just once, and it's ever since been down? I made a video about a Patrick Mahomes card be bought for, I think, like $700,000. He won 2 Super Bowls and a Super Bowl MVP or whatever it was, and the guy sold it for $163,000. I'll leave a cue to that card right above my head right here for you guys. So it's not all peaches and roses here with trading cards. And again, I'm just looking at it from a trading card perspective, because when we talk about this whole investment aspect of it, Pokemon cards are definitely something else. The next time someone pitches you a digital collectible, remember the original NFTs have been sitting in protective cases and trading on vibrant marketplaces for decades. Whether you guys are into NFTs or whatever, or crypto, whatever, I don't care. It doesn't matter. I'm personally not into it. I respect those that do hustle, Bitcoin mining and all that fun stuff, and people having fun with NFTs. All the power to you. But what if, and I fear this, and I think you should too, what if someone just takes the switch, right? And boom, shuts it off. That just would not be ideal. Would not be ideal. That's why I personally don't like it. I like physical things in my hands that I can feel, hold, touch, and actually enjoy. Often the revolutionary investment opportunities are not technological, but old assets viewed with fresh eyes. With tariff pressures mounting and resale businesses booming, the market isn't waiting for banks to catch up, and neither are we. Lior Avidar is the founder and CEO of Alt, a platform transforming how alternative assets are bought, sold, and stored. Alexis Ohanian is the founder and former executive chair of Reddit, now founder of 776 and an alt investor and board member. What an article. What a crazy article. I kind of gave my thoughts and opinions as we went in this video. I think it's definitely one that's loaded with a lot of vague information, vague details, something that they just don't really dive into fully like they should be, especially in terms of the different variables and grading and ultra modern versus vintage. Like in a vacuum, yes, trading cards have gone up in value, but again, just naturally. But why? It's not because they're appreciating on their own. Market supply and demand is a real thing. People trying to flip the cards is a real thing. People buying at the wrong time. I mean, how about Desmond Ridder? How about Jeff Wilson and the whole Desmond Ridder? What kind of investment was that? What is that card worth? How about Mac Jones' card being worth $100,000, and now what is that worth? So it's not black and white. It's not that easy. In terms of investment, guys, I mean, trading cards are not, sports cards specifically are not a good investment. Sure, you can make money along the way, and if you're really willing to hold something for at least a year, if not longer, is definitely better. Pokemon cards, I think it's a challenge just given the current situation of the market for Pokemon cards with how hot it is. With Pokemon, the prices are through the roof, so it's a hard time to get into it. You don't want to buy it at its peak, and a lot of people do that with sports cards, and that's how they got burnt and lost a lot of money. I still believe that the sealed booster boxes specifically, you could probably get some UPCs and ETBs along the way, or just some old school sealed product you just do not see at the shelf on shelves anymore is definitely a great buy. But you guys know me, I love my booster boxes in terms of investment when it comes to Pokemon cards. So from that angle, I would just say do your own research, come up with your own conclusions, feel confident with what you're doing in. Ask for a couple opinions from other people. Don't just go out and do it without hearing the advice of other people, because that's just how you'll get burnt in the long run. But hopefully you guys did enjoy this video. I read it first time. I gave you my thoughts, live action, and hopefully you guys are able to take away something from that. But like the video, comment, subscribe, check out the channel membership program, guys. Thank you so much for watching. If you enjoyed this video, I've queued up an excellent video that's actually going to cover my face, guys. The next video is right here. Click on this, and I'll hopefully see you in that video. Peace out, guys.